Want to know where the market is headed in 2025? In the next few minutes, we're going to break down our economic forecast in real estate for Utah and tell you all of the kind of insider tricks and tips on where to put your money and how to grow your wealth in 2025.
Magic crystal ball.
Magic crystal ball. So my name is Linda Burtch. I am the founder of ABODESlc with Keller Williams Salt Lake City. This is Liz Leonard, our lead buyer specialist. And Liz, we had the opportunity to go to the Salt Lake Board of Realtor annual real estate forecast for 2025 a couple weeks back. And I think it's really important for our clients and the people that we're trying to help to really understand what all of the analytics and all of the data mean so that they can make a good decision this year, whether they're in the market or considering being in the market or needing to be in the market.
Sure. Yeah.
So let's start with kind of a couple of the baseline things. So the median net worth between owners and renters, what do we know?
I mean, if you own real estate, you tend to have higher wealth.
Yeah. So let's quantify it. So in 2019, the average homeowner had a net worth of $295,500, where the average renter had a net worth of about $7,300. In 2022, that number jumped up a little bit. We're looking at $396,200 on average for the net worth of a homeowner and $10,400 for the net worth of a renter. I'll flash forward to 2024, the statistics again going up, which means what, Liz?
I don't know. What does it mean?
It means that homeowners are making more money.
We've had a lot of
over
appreciation
the
last few years.
So the average net worth of a homeowner in 2024 was $415,000, and the average net worth for a renter, a tenant, actually went down just to $10,000. So
inflation, right?
Inflation, right? Things are more expensive. Goods, services, commodities, all more expensive, and also the price of real estate going up. So if you're an owner, your net worth is rising with everything else. Now, when we talk about home price appreciation, you may have heard in the news a bunch that the market's going to crash.
Oh, yeah.
Yeah, so thoughts?
I mean, it's not going to, as far as we can tell. I think a lot of people connect recessions to home values going down.
Yeah.
And in the last, 5 recessions, home values have only dropped one of those last 5. And I think most of us remember that recession. It was the one in 2008 where your dog could get a loan for a property.
Yeah, like I'm a birthday clown and I make $400,000 a year. Let me go buy a mansion. Yeah. The recession itself was driven by the housing market, right? Poor lending practices. And that was what caused the housing market and the rest of the markets to crash. So, but keeping in mind, like that's a little bit of an anomaly. We've had tons of legislation and protections and lending laws put in place since then that have really made it so only qualified people can get loans. So you can afford the home that you're buying. And we look at the recession over the last couple of years, right? The sales graphs look really similar to 2008. I mean, it just drops off as soon as we saw interest rates start to go up. I mean, we had one of the worst home sales years that we've had in the last 14 years. But what happened with values?
They stayed the same.
Yeah, so instead of values going down along with the number of transactions, what we ended up seeing was the number of transactions went down, but property values actually continued to appreciate. Not as quickly as they did in previous years, obviously. I mean, COVID was a weird time and real estate did something that none of us thought it was going to do and just took off in a crazy, unsustainable direction. And so what we're seeing is values are slowly appreciating rather than at that rapid pace that we were seeing, which is kind of bringing us back to a level and more sustainable market.
Yeah, and COVID, when you have Black Friday sales on mortgages for years at a time, of course, the market is going to appreciate.
Yeah. So we've got prices stabilizing, but they're still at elevated levels compared to the rest of the U.S. I mean, here in Salt Lake and Tooele County, the median sales price is $581,800, and the rest of the U.S. is sitting around $418,000. So it's a little bit more expensive to live in Utah. We follow a trend similar to California, right? Like people love to be here, people love to stay here, we have a lot of growth here, we have a lot of opportunity here, and so the home prices are on average a little bit higher.
Yeah, I mean, we have a lot of jobs here too. I think we lead the nation. We're one of the leaders since COVID of adding more jobs. I think we added, 13.6% more jobs since pre-COVID. So, I mean, I think one of the big hot topics that everybody's talking about is, along with the market crash, affordability. When is it going to be more affordable? When are rates, what are rates going to do? And I mean, I think the honest answer is rates are going to go down unless they go up. And I mean,
it's a really solid answer,
yeah.
right?
And the reality is everything we're looking at tells us rates are probably going to stay what they are. They're probably going to remain pretty stable over the next couple of years.
Yeah. So, I mean, if the predictions are like rates will probably stabilize somewhere between the 6 and 7% mark, it's still below the historic average, and it is a rate that is sustainable long term, right? It helps to balance out our market. It curbs that appreciation that we see rapidly when rates go down. As far as like more competition in the market, people having to bring more cash into the market. If just having that just stable interest rate is the one thing that, even though people are kind of panicked, like 6 or 7 is really high when historically it's not, what it's helping do is curb that need for more buyers to get into the buying pool and creating multiple offer situations and raising prices at an even more unsustainable rate.
Yeah. And I mean, I think a lot of people don't understand why pricing isn't going down. And there's kind of a couple of factors, right?
Tell me, yeah.
So one of them is we have very low unemployment rates, especially in Utah. We have a lot of jobs. And so those two things make it so the government has no reason to step in like they did during COVID and artificially lower the rates for a long period of time.
Right.
A couple other reasons is like we are still significantly underbuilt. I mean, what was the number for this year? Every year it goes up a little bit by how much
we're short about 45,000 housing units for the number of people that we anticipate either needing to be in a position to buy a home or coming into the state, migrating here for a job or for whatever other reason. We live on a finite amount of land, right? They're not manufacturing more land that we can build on. And so the existing property that we have that is buildable becomes more valuable simply because of supply and demand.
Yep.
Yeah. So talk to me about first-time home buyers. Like, what are you seeing? What's the opportunity out there?
Yeah. I mean, I think the big thing is, I think with affordability, a lot of people want to get into the perfect house. And unfortunately, I just don't think that's a reality right now. You have to really look at this first house, maybe even your second house, as really a stepping stone to get into the long-term house that you want to be in, your forever home. And so what's been really interesting is they are predicting that condos and townhome appreciation is going to go up between 4 and 6% this year, and single-family homes is only going to raise about 2%. Which in history, this is something we've been seeing trending over the last few years. And I think it just comes down to affordability. So what that means for the first-time home buyer is, it actually is a smarter move to get into a condo or a townhome because you're going to have that appreciation going up faster than if you were in a single-family home. And what that also means is, say you are already in the market, you already have a condo or a townhome. Well, hey, your condo and townhome may have appreciated more than you even realize it has, and that single-family home might be in more reach than you thought it was too.
Yeah, so really there's a couple of kind of big opportunities here that she's talking about. Number one, if you're a first-time home buyer, get into something that you can afford. If you can qualify for a payment that you are comfortable with, there is no better time than right now to make sure that you are buying something that you own so that you are paying money into your own pocket and capturing that appreciation rather than paying your landlord's mortgage. That's the first benefit. The second benefit really is if you're already in a condo or a townhome and you are ready to move to that next step, you're in a prime position right now to capitalize on your equity in your current investment and roll into a market that's not appreciating as quickly. So you can sell at top dollar in one scenario and buy in a more reasonable price point.
And isn't this like the literal dream? This is like everybody trying to time the market. Like, it's impossible to do, but this seems like the most opportune time where you could actually somewhat time the market.
Sure. Yeah. And it's pretty rare, right? Additionally, condominiums now represent almost 1 out of every 3 existing home sale in Salt Lake County. That's a big deal. There's a lot of opportunity in that market. And if you're prepared and you can afford the payment for a condo that's oftentimes similar to the amount of money you'd be paying rent, now's the time.
Yeah, absolutely.
Yeah. Great. So, when we talk about what are we going to see sales-wise, right? Like the outlook and the summary for the Salt Lake market. We are looking at sales increasing by about 8% overall, right? And that's in the condominium market, and then 3% increase in single-family home sales. So that's a pretty big difference, right? If you talk to any of your friends that are in the mortgage or in the real estate industry, like the last couple of years have been pretty rough. It's the sales numbers have been similar to what we saw in 2008.
And I think that's where a lot of the news sources are getting their clickbait of like sales are down. Yes, the amount of homes sold is down, but the prices are not. And I think that is where people get confused is they think, oh, recession equals market failing and less homes means less price. And that's just not the reality.
Yeah, they're not directly correlated, right? Like the affordability and the interest rates moving up did cause less people to move. But the prices continued to go up also.
Yeah. And I think, there's another key factor there too. There's builder confidence, right? When you were at the height of COVID, builders were building, and it felt like for a minute there we might catch up. It seriously seemed like we might catch up and we wouldn't have this housing shortage that we still have. And then as soon as everything went up to a certain amount, it really dropped off. And now you're starting to see that builder confidence go back up. So it'll be interesting to see at the end of this year what how short we actually are.
Yeah, and with the Builder Confidence Index, like what we're seeing also is that builders are here to build homes that people want to buy and that people can afford to buy. They've got rate incentives, they've got price reductions and all sorts of things that where before, if you were buying a new house, that was kind of a luxury. And now builders are kind of starting to cater more to that first-time home buyer price point and make sure that people can get into something that's nice and brand new while at the same time being able to afford it.
Yeah, totally.
Yeah. Oh, well, talk to me about, speaking of mortgage rates, talk to me about the people that are already in their homes.
Oh my gosh. I think this is another big factor of what has made the market continue appreciating is, did you know that 73% of people are in either 3% or a no mortgage?
Yeah, so it's under 5%. So 73.7% of all 88 million homeowners in the U.S. are either in their home free and clear or in their home with a mortgage under 5%. Yeah. What does that mean?
I think people get really fixated on what their mortgage rate is of their home or that they maybe don't have a mortgage. And there's a couple different ways to look at this. But I think the bigger picture is people get fixated on their 3% or their 4% or even their 5% rate and think they can't move. But this is America and we like debt. And so people, when you actually look at their accumulative rate that they're paying between their credit cards and their car payment and student loans and everything, they actually have a way higher rate. And so if they're already in a home, it oftentimes does make sense for them to sell, pay off some things, and then reallocate that money into a new home and maybe even get less outgoing total and get to be in the right size house, get to be in the house they actually want to be in, whether it's bigger, smaller, better area, whatever the case may be.
Yeah, and you bring up a really interesting point. There's the cumulative interest rate of your household is a big deal. We are so, the media loves for everyone to believe that you're in your house at this 3% rate, you need to stay there. Don't ever get rid of your mortgage. And the reality of the situation is you might have 3 maxed out credit cards at 30%. You might have a car loan at 9%. You might have student loan debt that you could pay off but haven't been able to because you've been paying for everything else. If you're in conversations with your real estate team and your lending team and they understand what your goal is, there may be a better way for you to pay off debt, be in a better house or the right size house like you're talking about, and actually pay less every month than the whole sum.
Yeah.
And I think that's something that people really forget about.
Yeah.
Yeah.
And I think another big thing that people forget about is if you have no mortgage or you have a really low rate and a lot of equity, build wealth. Do you remember the percentage of people who build wealth through real estate?
Yeah, most of the richest people in the world.
got there
from investing in real estate. I mean, real estate on average appreciates at 4% on average over time. Some years it could be up to 10, 12%. Other years it might be similar to 2% like we're going to see this year in the single family home market. But as a whole, it's always going up. And so if you have this interest rate that you're locked into, but all of this equity that's just sitting there, you're not utilizing your wealth building opportunity to its full potential. So what could people do?
Oh, there's so many creative ways to tap into that wealth. I mean, you can do a home equity line of credit. You can do a cash out refinance. You could do a seller finance on your property so that you're still accumulating wealth and owning more properties and not having to pay the interest rates that the banks are offering.
Yeah. I mean, there's like the opportunity of maybe picking up an additional rental property or leveraging your equity in your house to pay off some of your other debt. Or, I mean, there's just endless possibilities. And it's really about having the conversation of what your goal is, right?
Yep.
Okay. So talk to me about right sizing. Like, what are you seeing in the market with the baby boomer generation?
Yeah, I think a big challenge with boomers is a lot of these guys do own their homes free and clear because that's what they were taught to do, is you buy things and you pay them off. And they are so fixated on not having a mortgage payment that they aren't making the right move. Some people, they're in these way too large of homes that have so many more expenses than they're realizing between utilities and upkeep and things like that, that it's like, hey, we're not saying sell that house. We're not. Like, keep it. That's a great investment. But pull out some equity. Go buy the little condo or the flat or whatever it is that you need so that you can be in a space that actually makes sense for you to be in. Maybe you're moving closer to family that can kind of help out. But you're still keeping this appreciating asset so that then, the thing that we can count on is we're all going to pay taxes and we're all going to die someday. So, then you have something still to pass on to your family. And some people, that's not appealing. Some people don't want to own extra real estate, or they're at a point in their life where it does make sense to just sell it and go buy what they want and take the family to Disneyland,
Yeah. I mean, lots of options. And one of the things that our team is super focused on is making sure that whatever your plan is, we're putting the right resources and the right strategies in front of you to make an educated choice. So I think that's really the biggest piece, is like understanding the position that you're in and then understanding what you want to do next. Yeah. Cool. Well, I guess we'll just recap all of it. So the economic forecast, right? Super compelling information. We've got a bunch of graphics and things that we've shared with you, but here's kind of all of it wrapped in one package and put a bow on it. So our demographic and economic growth is going to be a little bit slower in 2025. The decline in housing affordability due to the excess of 2020 and the 2022 market will continue to challenge home sales, but it's getting better. We're going to see home sales increase. Sales are going to be increased by about an 8% uptick in condominium sales and about a 3% increase in single family home sales. And mortgage rates, of course, we talked about, probably going to stay just right where they are. The median sales price of a single family home is going to increase by about 2% up to $620,000 in Salt Lake County, and condominiums up 6% to $450,000 in year 2025. Finally, the forecast has reflected an expansion of mortgage rates from 6 to 7%, but rates above 7% or below 6% would substantially affect sales. So like Liz said, they could go up unless they go down. Yep. So yeah, that's crystal ball stuff. I don't know the answers to that. So thanks for joining us. And if you have any questions, please feel free to reach out. You can reach us at www.ABODEslc.com, or you can call Liz.
801-898-4963.
Or myself, 801-808-2455.
Thanks.